In this video, guys, I'm going to talk about trading without stops. Stay tuned. Hey guys, welcome to you. All right, so stop losses are crucial to manage risk. And I want to just be clear here that we are not talking about zero risk management. What I'm saying in this video, I'm going to run through some kind of ideas with you, is that very many traders, and I've been through this myself, are constantly getting stopped out in a trade that actually, if they hadn't had a stop or it had been a little bit wider, would have worked out. Now, how many of you can relate to that? You probably can. Let me know in the comment section below if you think, hey, this is exactly the situation I'm in. Okay, so the dilemma we have is this. If, by the way, I've got an AUD USD chart here, any currency pair, could be any commodity, whatever, 4-hour chart, super popular time frame to trade for swing traders. You know, if you are, let's say you're buying at support here, you got pinged out, you're frustrated, you had it under the low, it went out, pushed to highs. Let's say you went short at a high here. There's so many examples where you get stopped out on a trade that's otherwise good and it's just too tight. But the dilemma we have is that we don't want to let a trade go massively against us. So let's say we're buying this support level, right? The market's come back, you're buying this support level here. You don't want it to just completely break and sit with it, which is why we have to have some kind of risk management in place, because if the price goes all the way down here, you're going to undo all your gains and it makes no sense. So we have this situation where we are caught between needing to get out of a trade where the thesis is negated and also staying in the trade where it's just a bit of noise is taken out an arbitrary level. Because at the end of the day, guys, you know, if we just, let's just pick this as a level. This is an arbitrary level. In fact, this is probably better for this current time period here. This is an arbitrary level that we've seen. Now, it may be that there's a buyer sitting there holding things. Maybe there's a big order to be done. Maybe sellers are shutting off. Whatever reason, that's for another video. That's discussed previously about support and resistance and things like that. However, if price were to come down and let's say test here, yes, it's broken, but are we thinking about what we're doing? We're buying the market at a pullback at a support level. If it's just broken a little bit, does it really mean the trade's negated? In some circumstances, yes. However, we also have a scenario where, hey, we could trade this and look at it objectively. If the market comes down, we give it a day, it then comes back up, we can then maybe put our stop below the low. We can trade these things. Now, the dilemma, let's go back to the dilemma, getting ahead of myself a little bit here. The dilemma is we don't want to give back too much. So here's something to consider. Many traders will take X amount of risk per trade. So let's say on each trade you're taking, let's use an argument's sake a number, $100 risk per trade. So you're taking $100 risk per trade over a 10 trade period, that's $1,000 risk. So you say to yourself, right, I'm prepared to risk $1,000 this week or whatever it may be. I'm prepared to do 10 trades or $1,000 this month, whatever it may be. And I've got my specific strategies that I'm looking to do. I know what I'm trying to achieve, fine. However, the situation you've got is that if you're getting stopped and stopped and stopped and stopped, that's the same risk as taking one trade with $1,000 risk. So here's something to consider. By the way, never a recommendation, guys. Always got to think for yourself, do some workout or risk in every single deal you're taking, high risk, all that other stuff. If you are taking a trade where you have $100 risk, think about having a stop, an emergency stop, way away from the price, like here for example, where that would be the 10 trades. Maybe 10 trades is too much, maybe 5 trades is a better example. Let's go 5 trades. That will be a 5 trade stop out. Okay, so you now normally would have a stop here, which would be $100 risk. Bang, just under that support. You're looking to buy the pullback to support. By the way, this is not a recommendation to trade this AUD USD at all. I just brought it up as an example. Happened to be up here. Didn't want to cherry pick anything specifically. Just wanted to run on the fly and kind of give you guys an example that was coming into my head. So let's say you're buying the support as it comes here. Let's say your stop's here. Let's say it's $100 risk. And it's probably going to be a little bit lower, but you get the idea if we're doing 5 times the risk. What you're doing now is rather than having your stop there, you're saying, okay, I'm prepared to take the risk of 5 trades. Now, in your mind, this is where we get a bit confused. We think, oh, we're taking $500 risk on this trade. That's a lot. But no, that's the very, very worst case scenario. What you're doing is you're taking 5 trades of risk, But instead of getting cut 5 times in a row and losing the 500, you're risking it on one. However, what you're also doing is you're also saying to yourself, right, if we break the support level that I'm buying at, or a hypothetical area that I would have had a stop in, you know, this is a great position. Let's just put it on as a dash dotted. So this would be our normal stop if we're trading $100 risk. From this point on, you can choose to close the trade. So this, instead of being an automatic stop out, which by the way, guys, when you go back and you back test anything, as soon as you add a stop loss into the mix, it ruins the results. It just makes it a really awful proposition. When you take a stop loss away, all of a sudden you've got something that's usable. So what does that tell us? It tells us that stops aren't as effective, but it also tells us, hey, if we use it as a guide, most of the time it's going to be profitable. However, we're going to get caught out from time to time. So this is a hybrid model that you can think about. You can say, right, I'm going to trade without a normal stop. I'm going to put an emergency stop in, which is 5 times my initial risk, my normal risk, should I say. So if it's $100, it's $500 away. If it's $1,000, it's $5,000 away. You get the idea. But when the price goes through a level that I would normally have my stop at, however you're judging that, by the way, you should still stick to the routine of placing the stop at a place where the trade you think is negated, i.e. under the level, above a wick, whatever it may be, below a trend line. Anyway, you're normally putting your stop and adjust your position size to suit. Don't change that, but just go, right, that's my mental stop. And from here, so if I now were to draw a kind of rectangle area here, from here to here, let me just pop that there, I'm getting a bit carried away with that. From here to there, we now have the opportunity to close the trade on your terms. If it got to here, the $500 level in our example, you're out. No negotiation, iron discipline, you cut it. But you have the option to use your intuition, to use your price action skills, to use all those things to decide if at that point you should close the trade or not. So maybe it sits there, maybe it does this, the next day it wicks lower and bounces back up. Fine, you keep it, you go, right, well actually now I'm gonna have my stop under that low. That becomes a little bit better. It's done a little bit of a flurry to the downside. It's kissed a little bit of their downside action. It's not liked it, it's put back up, it's still strong. I'm gonna hold it. If it does it again, I'm gonna assume it's broken. If it's continuing lower and lower, you can then say to yourself, which is something a little bit different, guys, is you can say to yourself, okay, I will come out on the first pop higher. If we get a pop higher, a green day, I'll close that because it's done 3 days to the downside. We're now well in this territory here. I need to try to get out of the trade at the best possible price. And again, this is a little bit different from normal thinking. You're waiting for a little bit of a green to actually get out of the trade before it goes lower. Now, that's not always going to be the case, and very occasionally you're going to get caught in something that stops you out. That's why you have that emergency stop position in, which is the no negotiation, things just gone wrong. Let's say you were shorting it here, ripped up and stopped you out. But if you look at the chart, on all charts, how many times does price do a massive run in one direction? Very, very rarely. So if you're setting yourself away from that, and then you're saying, okay, well, a great example would be here. Let's say you bought this for whatever reason, came down, hadn't quite stopped you out. You can still get out at a better price and still be within the rules of the game. You're not trading it hoping. You've allowed yourself the flexibility to get out within this zone, whatever you decide to do. Now, this is a little bit more advanced. This is something when you've got a strategy, but you feel like you want to give things a bit more room. You feel like you want to be a little bit more, use a bit more of a human element rather than being so binary with your entries and exits. But it's something to consider. It works well under the right conditions. You've got to have the good discipline for it. But if you're getting stopped and stopped and stopped and stopped and look at all the money you've lost on the stop, consider risking a bit more per trade in a worst case scenario. In reality, that's probably not going to be hit. In reality, you're going to pull the trigger and cut the trade way before then. So it's not really that much risk, but it gives you the opportunity for price to maybe test around your stop loss. You're not so stressed about the position either. You're not thinking, I've been stopped out. You can be a little bit more cooler and calmer about it. It's not for everyone, but it's something to consider. But take care, guys. See you in the next one. Bye-bye.